gentlemen, welcome to Market Today on Business Today Television. It's a fine Tuesday morning in Delhi. I am Shail Bhatnagar joining with you from the capital. Let's look at how markets are structured today. Remember, this is the first trading day of the month of October, although we've begun the weekly expiry a week earlier. Indian markets were shut yesterday on account of Gandhi Jayanti, so they are going to react for 2 consecutive days of action both on Wall Street as also in Asian markets. And let me tell you, while we start a fresh week a day later, the fact is that the cues coming in from overseas are a bit worrisome. All that and more, but after the headlines. Indian stocks are likely to start the week on a back foot at Asian and US markets send weak signals to Dalal Street. With the Dow at its lowest since June, pressure is building up against bulls as the 10-year Treasury yields hit the highest since November 2007. Meanwhile, India's GST collections up 10% year-on-year at 1.63 lakh crores in September, pointing to strong economic demand. Traders and investors are advised extreme caution on longs in mid caps and small caps as overstretched technicals and sky-high valuations versus large caps point to an impending correction. Good morning once again, ladies and gentlemen, and it's a pleasure to be with you on Market Today at Business Today Television. Let's begin our analysis of the market on this fine Tuesday morning. We've seen a fairly strong traction coming in from bulls. It was a late afternoon kind of a surge that happened on Friday, and that was on account of 2 reasons. One, of course, we had the half year ending, as also the end of the quarter for September 30th and the end of the month. And normally we've seen a lot of fund managers wanting to have a fine net asset value for the half year, the quarter as well as the month. And that was perhaps one of the reasons why you saw some good amount of short covering that led to the Nifty pointing higher. We ended about 0.5% higher on the Nifty. The Nifty Bank was 0.6% higher at 44,584. So that was the reason behind the late surge that you saw on Friday, and that actually culminated in a kind of profit booking as well as some sort of selling intraday. You will see the Nifty chart in front of you, and as far as sentiment is concerned, well, this is the policy week for the Reserve Bank of India. On Friday, October 6th, the Board of the Reserve Bank of India will decide how interest rates will move in the busy season. Remember, the second half of the Indian financial year is more active, has more strength simply because of festival demand and the fact that the economy gathers up steam after building up a lot of positions during the first half of the year. Given that stance, it's most likely that interest rates are likely to remain where they are. The pause that started in April and which sparked the rally on Indian markets is likely to continue. So with interest rates stable and the fact that the GST collections for the month of September are at 1.63 lakh crore rupees, it points to a robust economic strength as far as the Indian economy is concerned, and that is likely to continue. However, the markets might react differently. We are most likely to see a consolidative phase over the next 4 days for a couple of reasons. One, it's a truncated week. Monday was a holiday. Therefore, options premia will have 1 less day to get squeezed or scrunched. That is going to be an overhang. Of course, with the policy impending, it's unlikely that bulls will take an upper hand, and that's also visible from the kind of signals that are coming from GIFT Nifty. They point to a weakness. Secondly, globally, we have a risk of trade coming in from Wall Street as also from Asian markets for a couple of reasons. One, the 10-year Treasury yield in the US on bonds is at a 15-year high, and that's a big pain point for bulls. A lot of money from emerging markets is moving back to the US economy, and that is visible in dollar strength. That also means that a lot of commodity trades will not be working on the long side. You can see the correction that's happening on crude oil prices. By the way, that's very good for India, and the fact that gold is also thinning out. So a strong dollar is negative for commodities, a strong bond yield is negative for global equities. That is the reason why you see the Dow Jones index, which is falling below 200 DMA, and the latest price tick there shows it's at the lowest level since June. Coming back to the Indian markets, unlikely that bulls will extend positions that you've seen on Friday for two reasons. The foreign institutional selling for the last week was at about a net 8,300 crores. This is the fourth week of consistent selling, and without that kind of a support, it's unlikely that domestic bulls would want to extend positions on the Nifty and the Bank Nifty. However, given the data that we see for the Nifty in the options chain, and specifically based on Friday's trade, we've seen a lot of short covering and a build-up of long positions in the money calls for the Nifty, and that's also resulted in a lot of trading range being shifted upwards. For now, 19,600 and 19,800 are the support and the resistances for the Nifty respectively, and the fact that it is at 50 DMA. A short will work if the markets rally a bit, and you will have an intraday point where you will see that being sold. As far as Nifty is concerned, that's the feeling. The trend is weak and it's likely to consolidate during the policy week, which will be unveiled on the 6th of October. Coming back to Bank Nifty, and in a while we'll welcome Mr. Dharmesh Kant. He's the head of equity research at Cholamandalam Securities. But for the Bank Nifty, again, the same reasons that are active on the Nifty will also work negatively on the Bank Nifty. Moreover, it's a policy week and banks are impacted more than what the broader markets are. Therefore, a sideways to weak consolidative trend is seen on the Bank Nifty, except for Axis Bank and Federal Bank. None of the other 10 charts show any kind of strength as far as individual stock performers are concerned. So Bank Nifty is also likely to tread water unless the policy is released. So 6th October till now, we'll see a sideways trend. Dharmesh Kant is with us. Welcome, Dharmesh, to Business Today Television. It's such a pleasure to welcome to you on Market Today. Tell me, how are you looking at the broader markets since you actively track the banking sector with such instance and rigor? What are the charts telling you, and what is the prognosis for the next 4 days?
Yeah, good morning. See, Shail, how the market has panned up, the macro front, everything has been shaping up pretty well. If you look at the core sector growth numbers, they were very rock solid. At the same time, the cement numbers, Ultratech reported a very strong volume growth, and that was expected because August was a dry spell, so that is helping out. At the same time, the tax collection number has been very strong. So all the fundamental macro data points are pointing to a very strong set of Q2 numbers. When the corporates roll out their numbers, it's likely to beat what the analyst is expecting. At the same time, global headwinds, though it's an indecisive global headwind which is playing out, because the talk about US recession has not panned out so far, and it's the data point which is coming out from US in spite of the historic interest rate is very strong. So what is seen across the board in economies, the relevant economies which is driving the world economy as of now, is a uptick in the strong macroeconomic data point fundamentally. So what we are focusing on is the core economy. The cyclical ones like metals, infrastructure, cement, automobiles. These are the sectors which should be in the spot for a trending drift on the buy position. And as you said, financials, I think this time again, financials are going to surprise the street on the NIMS and the ROA front, because last quarter the expectation was the NIMS is going to contract. But that did not happen because of the 2000 notes were rolled back into the system, and that led to a good CASA and lower cost of fund. This time around, again, most of the banks have passed on a higher interest rate to the consumer. So the short-term lending rate has gone up, and that will take care of the NIMs again. And the trade growth would be around 15 to 17% on an average for the industry. So there again, the surprises will be there. The sector which is in for re-rating is the banking space, and it's likely, public sector banking space is likely to be so. So again, the outperformance will come from public sector banking space as compared to the private sector banking space. That is the relative outperformance I'm talking about. And the stock ideas out there, I think Canara Bank remains a topic from the public sector banking space on all metrics, be it valuation or the upside momentum, which we can see. And when it gets related to the likes of SBI or Bank of Baroda, around 20-25% kind of an upside can still be there. So these are the sectors and spaces where we are specifically looking for good momentum opportunities. And for the day, one can go with Canara Bank.
Fine, that's a good point that you make, and of course the traction that we've seen in Canara Bank has been phenomenal. Let me just share some data with you. For the past week, Canara Bank was of course down 1.2%, but this has been one of the star performers as far as the current rally is concerned, both in the PSU banking sector and of course in the mid-cap index as well. The Canara Bank is up about 26% in the past quarter, and if you look at the 1 year performance, well, it's a fantastic 65% rally. The dip that you saw last week is what Dharmesh advises you to buy. The all-time high on the counter is at a fair distance away, and at the moment at 376 rupees in front of you. It's the highest since December of 2017, so that would make it a 6-year high, and the highest level that you've seen is 821 rupees. So a lot of upside still left, and given the strength that we are seeing in the banking sector balance sheet, as also the growth in the economy, corporate lenders such as Canara Bank should have a good time over the next 18 odd months. Dharmesh, the other point I wanted to ask you is how are you dealing with the demands of how should I say ultra HNIs who see a very strong traction coming in mid caps. If you look at last week's performance, the Russell 2000 was the biggest loser in the US markets, which of course represents the small cap and the mid cap space on Wall Street. We haven't seen that kind of a correction come in as far as Indian mid caps and small caps are concerned, but it's only a matter of time.
I mean, the correction may not come in India in the mid and small cap space, but the relative outperformance of the price action is what we are doubting as of now. And as you rightly pointed out, if you look at Russell 2000, it's up only 1% year till date. So, in fact, in the US, if you strip Nasdaq out, so Dow Jones is up 1% and Russell is around 1.3% year till date. So, there has not been any action out there. Back from our side of the market, so what we have done, we have proprietary indexes we have built up on a market capitalization basis. So there, what we have found is market cap in excess of 200 to 500 rank wise. They have done phenomenally well, and that is where the slowdown is happening. If you look at price to earnings multiple, they all are trading at near to +1 standard deviation, and that is where the correction sets in. It can be a time-bound correction or a price correction. What we are expecting is a time-bound correction to happen there. As far as ultra HNIs are concerned, they are holding on to their mid and small cap bets, which they have taken. None of them is still talking about liquidation or profit taking. What they are specifically concerned about is the earnings trajectory. They are willing to wait for a year or so. So that, sentiments have already, sink in, that one has to wait for time for this to have a next leg of a better price appreciation. So they are holding on to this, but what they are asking for is more of a traction into large cap space and the immediate mid cap. Rank wise, if you say from 50 to 200 market cap. So that is the area where I think the most of the traction is going to come. And there we are focusing more on the infra space, railway stocks, and construction, I said infra, and at the same time some banking space. So public sector banks we already discussed. That is one area which is looking exceedingly well. And the other area where I think still there is a lot of buying opportunity and good price action can happen is the railway stocks. For example, RVNL or Ircon, if you look at it, they are still undervalued compared to the type of growth trajectory they have impact on, around 25% kind of growth plus 23% kind of an ROE. And forward multiples are still 21 to 19. So such kind of stocks do get related to 30, 32 kind of a PE multiple. So 40, 50% kind of a upside is still there. So RVNL, if one can buy for even for 1 year perspective, I think 220, 230 should be the price target coming out there. And that is where on every dips accumulation is being seen, but it's in a staggered fashion. Now that gung ho kind of putting all in all at one go is not happening. And that I think is the right strategy to take forward in this
Absolutely.
market.
Fair point, and it's the most sensible thing to do is to buy in a staggered fashion. And the fact that we've seen a fairly recent high, all-time high on RVNL, that makes it all the more reason to be cautious on this one. Dharmesh, the other thing that the markets will do today is to react to monthly auto sales for the month of September. They were fairly substantial, and auto has been one of the sharp outperformers in the market for the year to date so far in 2023. Any stocks that catch your fancy there?
Yeah, definitely. I think the domestic centric automakers, be it two-wheelers or four-wheelers, have done phenomenally well. Look at Maruti's number; it was excellent set of numbers. More than 190,000 units sold in the month of September was a very encouraging set of numbers. Same with Mahindra and Mahindra came, though their farm equipment segment, the tractors was the only drag. Otherwise, utility vehicle segment and SUV segment has done particularly well, and that was the case with M&M and Maruti as well. So these are the two stocks which we are looking forward for a commercial point of view. Other than that, I mean, just a trading blip for a quick 5 to 10% kind of an upside can still be seen in Eicher Motors and Hero MotoCorp. So the idea is to go for a sector allocation equal weighted basis. I mean 25%, 25% each in Maruti and M&M, and rest 25 and 25 in Hero MotoCorp and Eicher Motors. So these are the top four counters we are focusing on. We are still avoiding export-oriented themes like Bajaj Auto or for TVS Motor, where the significant portion of their revenue comes from the export division. So there still the worry is there. Just avoid that sector. There are better places to play out for. Scott's Kabuta, I mean, price action has been very strong, but I think farm equipment is one area where still some murkier cloud is there. So we are just avoiding that.
Fair point. Dharmesh, the other thing I wanted to ask you was the strength that we are seeing in the dollar index simply because money from our markets, which the foreign funds are selling very heavily, is moving back to the US economy. Would you want to comment on how the dollar index is likely to move from these levels? And of course, that has a positive impact for all raw materials such as crude oil, metals, all of them softening up a bit.
Yeah, definitely. I mean, Shail, if you look at the way the strength in the dollar index has been 6-7%, and that's phenomenally very strong if you are taking 100 days a base. And the way things are panning out, and if we talk to technical chartists and all, they are pointing to much higher levels, 115, 120. And going by the way things are happening, panning out in US, be it US 10-year bond, it or dollar index, it looks like that those targets can still be achievable. At the same time, for us, being largely an importer of most of the metals and minerals, this is helping us out, even the crude oil basket, because the parity, it leads to softening of the metals and crude in the international market. Some level of impact is there. What is exceptionally a good point out here is the way the rupee has been managed by, I mean, the type of appreciation we have seen in the rupee. It has not appreciated the way dollar index has appreciated. So around 200 basis point kind of a year till date kind of advantage we have. In fact, we have appreciated against the dollar index for this year so far. And that is what is helping out the entire balance of payment kind of a scenario. And it's good for our country, though for export-oriented undertakings from our country like IT sector and the textile and chemicals, it may be a bit of a dampener out there. But for the larger economy and for the country as a whole, this is very beneficial as long as rupee does not depreciate the way dollar index is appreciating, which I think is likely to be the scenario if we are sitting on very good dollar reserves, and the way the trades are happening, I think these reserves are likely to hold. So this time around, this appreciation in dollar index is helping our economy. So good for our country.
Right. The other thing, Dharmesh, I wanted to check was this corporate development with you, Vedanta. A series of flip-flops. The promoters, in the earlier instance, merging all the business groups under a single entity on which a lot of debt was taken. And now, when the stock prices are falling very, very sharply, the promoters have decided to break the company into 6 individual subsidiaries, and shareholders would be getting 1 share each of the business that Vedanta has. How do you see this as far as corporate governance is concerned, and what you would advise to investors who hold Vedanta stock?
Yeah, it has been much of a to and fro movement on the corporate policy and strategy side from Vedanta Group in the last 6, 7 years, and they have been still trying to figure out how to come out with a solution for that kind of debt they are sitting in the parent company. And this all is happening because of that debt burden which is there, and they are still not figuring out the correct way to get out of it. But what has happened, this unlocking of value, what this will do is it will provide a floor. I think the floor for the Vedanta shares, be it Vedanta Limited or Hindustan Zinc, has been set. It won't fall below that, because if you look at Hindustan Zinc, even in the silver business, if you look at it, it contributes 15% to the top line, but almost 40% on the EBIT level. And last 3, 4 quarters, from 21% kind of a contribution, it has gone up to 41%. The reserves are immense. So value unlocking will come up in a bigger way. When all, if you look at respective businesses in the Vedanta Group, they are doing pretty well. Be it aluminum, be it copper, be it zinc, or the crude oil, silver. In businesses, there's no problem. The problem is with the how the money shifts from these particular companies to service the debt of the parent company, which is overseas. So that's a big worry, and that is where, I mean, corporate governance and everything issues and alarm bells sets in. But investors have been holding on, and I mean, we have also recommended our buy on Vedanta Group, and Hindustan Zinc and Vedanta Limited is there in with most of the investors, and holding on to that. I think going forward, at least 20 to 25% kind of an upside elbow room with this restructuring has come into place, and that will help to service the debt, because the share valuations goes up, and even if you are pledging and servicing the debt, it helps you in the overall scheme of things. And one upcycle in the metals will be a very big breather for the Vedanta Group, and that is what I think the promoter group is waiting for and expecting. So right now, the recommendation is to hold on to it, and at least if you have a 1 year vision, I think one should be in a better place than what we are as of now, if we are holding the shares.
Fair point. And the fact that I wanted to make was that Vedanta had an all-time high of somewhere like 377 rupees. No, actually it was much more. I'm talking about the 7th of April 2022. We've seen a price of 442 rupees. At the moment, it's almost halved at 222, and that's the reason behind is the heavy debt burden that the promoter has, and he's consistently used the very strong income pipeline of Hindustan Zinc to sort of take dividend out and try to get out of the problems on the debt side at the group level. Given the loss that you see on the stock price, at the moment it's trading somewhere at its lowest level since July of 2022. Let's see how it pans out in today's trade. Dharmesh's view is that you should hold for 1 year, given the fact that the promoter has a series of, how should I say, corporate events lined up. It's best left to people who have a deep understanding, such as Dharmesh, and in a while Sudeep will join us. We'll take a technical view on the charts. Be that as it may, this is what Vedant has done. It's more or less broken up the company into 5 or 6 units, promised shareholders to have one share each for the new subsidiaries that are being set up. And if you look at the 15-20 year history of Vedant, it happens periodically. They merge businesses into a single entity and then they break up the entity into subsidiaries. Well, that's life for you. I think pre-open trades are in front of us. The Nifty opening about 15 points higher, 19,650. This is unlikely to continue given the depth of weakness that we see in Asia, especially on the Hang Seng Index and the Nikkei, as also the weakness that's creeped in from GIFT Nifty. This downtick is what we are expecting. Let's look at the heaviest weighted counters. HDFC Bank first. Remember, the overseas ADR actually fell 1.8% yesterday. Let's look at how it's opened in Indian markets. 1527, flat for the moment. How about Reliance? 0.5% lower, 2333. And Infosys, the counter at the moment, flat at about 1435. HDFC Bank, Reliance Industries, and Infosys are the three major pillars of Nifty, given the immense importance they have in terms of weightage. What's clicking in the green? Hindustan Unilever. Remember, this was a stock. This was discussed on the long side on Friday. 2.5% higher, 25.28. It's the defensive mode that is coming into the markets. Hindustan Lever had corrected very, very sharply over the last 6 months, and it's the bottom-up purchase that's happening. Ditto for ITC, 444 in front of me. L&T, the rally continues unabated. We have 0.7% gain at 3,045. Remember, this is one of the strongest stocks on the Nifty, and it has done extremely well over the last 5-6 months or so. The Nifty continues to remain in strength as far as the price tick is concerned. 21 points higher, 19,662. Beyond what is the index heavyweights, let's look at the F&O space. And the F&O space at the moment, apart from the indices, is throwing up a mixed trend. Vedant, 10% higher, 244. Let's see how this holds. Steel Authority, 1.7% higher, 94.95. M&M reacting to monthly numbers, fairly strong strength there, 1587, 2.4% higher. National Aluminium, NMDC. Remember, it's going to be a metals day, it seems, as far as pricing is concerned. Ashok Leyland, 1.3% higher, 179. Let's look at some losers as well in F&O. Biocon, 2% lower, 266.90. Bharti Airtel, 1% lower, 916. Axis Bank, 1% lower, 1026. Aisha, 0.5% lower, 3426. We'll shift focus immediately to Nifty 500. Let's look at stocks which are on the gaining side. We have Navin Fluorine, about 1% higher, 3800. Remember, it was the top loser on Friday in the F&O space, down 13%. So some kind of a short covering happening there. We have Birla Corp, 3% higher, 1268. We have CSB Bank, 2% higher, 343. And of course, we have Karur Vyasa Bank, 2% higher, 136.60. So these are the prices. We'll wait for them to settle down. The Nifty, surprise, surprise, gaining strength, 40 points higher, 19,681. Let's see if Sudeep has joined us. Yes, he has. Deputy Vice President, Head of Technical and Derivatives Research at SBI Securities. Sudeep Shah, welcome to Market Today on Business Today Television. What a pleasure to host you. And maybe it's the green tick that's welcoming you more than me on the Nifty. How do you read the index for today?
Good morning, Shail. And yeah, absolutely. Green tick is welcoming me, but I am doubtful how long will it sustain. Let the markets open in just a couple of minutes, and we would see the true colors, I feel, because the way Asian markets are giving up the gains, even yesterday, today, we've seen in the last week also. And despite that, Indian markets have held 19,500. So see, it's the kind of macros that are deteriorating now. If we see the dollar index, if we see crude prices, although crude prices in the last couple of days have retreated back to $92 a barrel odd, but the way these US markets in the data from there, as well as the 10-year bond yields are shaping up, I have my doubts that we might see a big bang rally in the next few days. At the best, index might consolidate between 19,450 and 19,750. And the one more thing which is disturbing is that last 4 or 5 days, even when the global markets were positive, Nifty could not cross 19,750, 19,770 zone where the 20-day exponential moving average was placed. And similarly with Bank Nifty also, 45,000 was not being able to cross. So here I feel that we need to let these levels get crossed, let indices sustain above these levels, and then take a call whether there is a uh, whether the rebound rally has that kind of strength or not. Till that does not happen, I feel that we would be trading in a range from a Nifty perspective. It could be 19,500, 19,450 on the downside and 19,750 on the upside. And similarly, now see in Nifty also, if the indices are opening around 19,600 or 19,580 after the first tick, and it would be once again back in that range in the August month where we saw Nifty's hitting resistance around 19,550, 19,600 every time it used to approach that zone. So we are coming back slowly and steadily in that zone now. Similarly with Bank Nifty, 45,000, as I mentioned, is an important resistance on the downside. Positionally, 44,000, 44,100 could act as an important support now. And remember, this is the same zone from where in the month of August we saw the Bank Nifty starting its rally up to 46,000. So these important levels in Nifty, 19,450, 19,550 kind of band, and from a Bank Nifty standpoint, 44,000, 44,100 zone, these important levels are likely to get tested. And here we will come to know whether the markets are holding out or they are breaking these levels. So I would only go with one theory: let the resistance get broken, and then let us take a call whether the markets are going on the up, or at least at the best, let them trade in this range.
Perfect view, Sudeep. And as you had pointed out immediately, and I have been saying for a while, the true colors of Nifty will be visible fairly soon. Now down 16 points, 19,622. Sudeep, before we discuss the sectoral rotation of money that is happening in the pharma and the FMCG space, would you please share your two top picks for today?
Shailji, my first topic would be NTPC. Now, NTPC, we have seen it has given a 15-year breakout. It's a multi-year breakout, positive on all time frames, daily, weekly, monthly, as well as in the recent rollovers that have just happened for the month of September, October. Now, what we have seen is that the power space was having, we've seen a lot of long build-up going into this power sector, and especially NTPC. So I feel this could be the stock of the series, or at least stock for the next few days. And from the current levels, as well as on a dip to 240, one can add this stock with a stop loss of 235 and a target of 260 on the upside. So the accumulation zone could be between 240 and 244, and the stop loss could be at 235. And on the upside, we expect 260 levels to come. Now, the second stock which we like is Grasim. Although opening a bit on a softer note right now, but what we feel is that Grasim is steadily making a good base around 1890, 1900 kind of levels. And we have seen in the last few days when a lot of other stocks are facing selling pressure, these cement names such as Grasim, Dalmia Bharat, they have been outperforming. So I feel that Grasim from here on also could witness a bigger breakout on the upside, and we could buy Grasim at current levels of 1925, 1930 with a stop loss of 1890 and a target of 1980 and 2010 on the upside.
Right. Sudeep, I must compliment you on the choice of stocks that you've made. While they, of course, show a strong upside on technical charts, but the fundamental strength that both NTPC and Grasim offer remains to be really exploited by the market. We'll get Dharmesh's view on that in a while, but two data points I'd like to tell you. NTPC record high that you see in front of you has been on the back of a very, very strong rally The 1-year chart will show you a rise of about 54% at 247. Remember, this is one stock that has come out of a 14-year sideways to uptick kind of a zone, and the breakout is fairly sharp. Any dip here needs to be purchased technically as well as fundamentally. Grasim, of course, is up just 15% on a 1-year basis, but a very well-known corporate name, and is likely to outperform really in the long term. Both these stocks, Grasim as well as NTPC, are consolidating near record highs. Dharmesh, coming to you, your pick please, NTPC or Grasim, what would you prefer?
So I would say NTPC because power sector is more of a growth sector as of now, and going with the way the renewable energy addition is likely to happen in next 5 6 years, around 100 gigawatt each year is the target. So that opens up a very big space for all the power sector plays, be it NTPC, JSW Energy, Tata Power, or Power Grid. So what we are now advocating with the type of run-up which we have seen in all the power stocks is like a basket approach kind of a thing with a equal weight kind of an allocation, and keep on adding on all the dips. So it's a good long-term play for next, say, 3 to 5 year kind of a time horizon if somebody is having. They are doublers from here because the capacity additions each one will be having will be almost, they all will be doubling the capacity in next 5 years time frame. At the same time, the ROEs are going to be maintained in operating leverage as well as the operating margins will be much better going forward because the type of price stability we have seen in electricity and the consumption is 10 12% kind of a growth. So this all augurs well. Grassing, why I would like to avoid is because of the diversified kind of a portfolio they are setting on, and they foray into the paint division. One has to see how it pans out eventually and how it leads to the market share gain and the operating margin front. So it's a more of a holding company I would avoid rather than I would go with Ultratech Cement from the same group for the cement play. Paint as a play we would like to avoid given the current kind of a scenario and the heavy competition which is coming in. You can say the same for the cement sector, but cement sector the volume growth is far higher than that in the paint segment.
Okay, I'll add 2 bits from my side as far as NTPC is concerned. Of course, it's a record high, but remember, it's trading at a PE of less than 13, and the price to book is fairly reasonable at about 1.6. I had mentioned that the 1-year return on NTPC is at somewhere like 58%, but remember the 10-year CAGR is just a meager 7%. It has underperformed the Sensex, it has underperformed even its BSE PAR index. So you can see the kind of intensity that the stock has built up. It's broken a 14-year high, and things from now on, as far as dips are concerned, should be added fundamentally. View coming in from Dharmesh, and technically the chart looks fabulous. The Nifty now settling at 19,622, 16 points lower. We'll dive a bit into where money is moving in. Sudeep, coming to you. Pharma and FMCG. We had discussed lever last week. What is your view on this chart? Hindustan Unilever.
Yeah. Shelly, if we see Hindustan Unilever, although it is opening with some kind of a gap up today morning, as the pre-open trends are showing, I feel levels on the upside which are crucial would be 25.10, 25.15, and only if these levels are crossed, we could see some kind of a rebound up to 25.40, 25.50 kind of levels. So for me, 25.10 would be the most important level. 25.10, 15 would be the most important level because this stock has underperformed massively just because of managing the index today. If it's opening positive, we need to see how much it is sustaining, because if it's just an index management tool which is going to happen, then 2515 needs to be a trigger point for entering from lower levels and just benefiting out of this rebound rally. Else there is nothing changed in the stock with respect to the overall trend. So the overall trend is weak. It's only that because of index management, as well as the stock is approaching its important support zone now. In the last week also, we have seen the stock on 20th of September and 29th of September retesting 2450 levels, where multiple times in November 2022, then May 2023, and the current month, we have seen the stock taking support. So although it's at important support.
Right. The markets have opened and it's a downtick, reflecting the weakness that's creeping in from GIFT Nifty and from the sell-off that we are seeing in Asian markets. The Nifty down 92, 19,550. The Nifty Bank 44,410, down about 180 points. It's a sea of red across the screen. We'll first start with HDFC Bank. It's 0.5% lower at 1516. Remember, the ADR in the US market was down 1.8%. Let's see how the ticks manage from the current levels. Reliance already down 1%, 2320. It's not looking good for the Nifty. Infosys, I want to see what it's doing. Down 0.3%, 1433. All three index heavyweights are now down. Let's look at the second rung when it comes to the index. ICICI Bank flat 950. It's a red tick. Axis Bank flat 1035. It's a red tick. TCS and State Bank of India down about 0.33%. So far we haven't seen a green tick on index heavyweights. Hindustan Unilever flat 2467 in minor green tick. What else? So all 10, 11 index heavyweights are in the red, and the Nifty has put its first century, down 103 points, 19,534. Nifty Bank down 200 points at 44,371. Let's immediately shift focus to F&O stocks. I want to see what Vedant is doing. Up 3%, 229.30. This is a stock to watch for a couple of reasons. Corporate developments, an intense amount of how should I say, fear coming in as far as this restructuring is concerned. Let's see how it pans out. For the moment, the top gaining stock is NTPC, something that our friend Sudeep suggested, 247 in front of you. Let's look at the auto pack. It's reacting to numbers. Maruti down 1%, 10,508. M&M up 1%, 1572. Tata Motors down 0.5%, 627. Ashok Leyland up 0.7%, 178.15. This is how the broader markets are coming in. A bit of a corrective rally happening in Naveen Fluorine, 1.7% higher, 38.29. Remember, this was the top loser in F&O on Friday, down about 13%. Let's look at the top gainers in F&O. Mahanagar Gas up 4%. The company's cut rates for PNG as well as the gas that comes into Mumbai homes, now at 1,072. Corporate development working very well there. Indraprasth Gas up 1%, 459. Federal Bank taking it away 1% higher, 149. NMDC 1% higher at 148. I also want to see what the high beta sector is doing. Let's go to rail stocks immediately. RVNL, remember this was what was suggested by our friend Dharmesh, top gainer in the railway space, up 3%, 174. This is something to look at. IRFC at the same breath up 0.7%, 77. Let's look at the defense space. This was roaring very sharply on Friday. Let's look at the top gainer, Astra Micro, 2.7% higher, 439. Hindustan Aeronautics, 0.3% higher, 1935. Mazgaon Docks, 0.3% higher, 2199. Coming back to the Nifty, down 100 points, 19,536. Sudeep, what would you be doing? We've had the first 4 minutes of trade, fairly okay, I would say.
Shailji, as we discussed, the real picture would come at 9:15, and we actually have seen a real picture right now, 100 points down as against the pre-open, which was in the first 5 minutes showing a positive tick. So what I feel is that now it's in line, but what I from here on also, I would not go too much aggressively long, because I want to see that whether these levels of 19,580, 19,600 are being crossed or not. Remember, also on the flip side now, 19,500, 19,470 zone will act as an important support, because the highest put writers were placed on 19,500 and 19,600 strikes in the last couple of days post the expiry. So 19,470 will now act as an important support from here on. And on the upside, we need to see that 19,600 crosses and indices sustain above this, for us to at least have a kind of a mindset that it now from here on we could see some kind of a rebound rally. So 19,600, the most crucial number on the upside. Till that does not cross, I feel on the downside 19,450, 19,470 can get tested.
Okay, so that's how the thing is, and the fact that the first 15-minute candle would be very very closely watched, and a move below that 15-minute candle on the Nifty and the Bank Nifty will result in more selling coming in. Let's look at the broader markets. I'd like to see what are the indices apart from the Nifty and the Bank Nifty and the IT index are doing. Well, I track 19 indices, all 19 of them are in the red. The metals index is the top loser, down 0.7%, 67.89. Pharma is taking it on the chin, 0.5% lower, 15,329. Energy, auto, bank, all of them are in the red. Let's look at what's ticking in the green. It's going to be a defense day. I would imagine. Let's look at Bharat Electronics, 139. It's a green tick in a market that's bathed with red. So that's strength that's coming in. Let's look at Marico. So the money is actually moving into the defensive counters, which is FMCG. Let's join base with Dharmesh. Dharmesh, anything that catches your interest? Maybe Marico?
See, with the type of, eventually the monsoon panned out almost near the normal, though it was 1.5% below the long-term LP of 96%. But nonetheless, the swing has been good, and all the FMCG stocks are primarily the business comes from the rural and semi-urban areas. So that side is now taken care of. I think with the type of correction which we have seen in most of the stocks from last, if you look at 1.5 months, like Hindustan Lever or Dower. So Dower is one stock which attracts my attention. Marico today has been doing well, and the numbers were good for the last quarter, so it's likely to do well going forward as well. But in pecking order, I would like to go with Dower first, and then maybe a Marico and an ITC. So these are the three counters where one can build into position. I would still avoid, for example, Nestle or Hindustan Lever.
Fair point. Sudeep, your best pick in the FMCG space. Remember, Marico is now the top gainer in the FNO space, up 4%. A very strong rise in open interest, 5% higher. What would you say on Marico's chart, and what would your top pick be in this sector?
Yeah, so even my top pick holding out at their important support. So now if we see the chart of Marico, it's complete. There's a strong moving average placed at 575. So till the time the stock is sustaining above 573, 575, I feel we could see a fresher high on Marico closer to 615, 620 levels, which was the prior swing. If I'm not wrong, it was the prior swing high around in the month of October 2021. So I feel it could move beyond that level. So overall, the stop loss for this trade could be 574 on the downside.
Fair point. We are waiting for the first 15-minute candle on the Nifty, and any move below that will trigger technical analysts like Sudeep to press the sales button. For the moment, we have seen a 105-point downtick on the Nifty, 19,532. So 19,500 would be a battle between the bulls and the bears. Remember, we had one less day in this weekly expiry, and we are seeing options premia getting scrunched. For the moment, the scene as far as the Nifty options chain is concerned is fairly negative for bulls. The net PE minus CE change in open interest is minus 73 lakhs. That is not a good sign, and I'm seeing a lot of bearish build-ups in the money call, 19,300, 19,400, 19,500, all showing a downtick, a severe downtick in price, as well as a very sharp rise in open interest. So those are build-ups of shorts, and let's see how the first 15 minutes pan out. At the moment, the first support on the Nifty has been taken out on the 5-minute chart, and it's a series of 3 red candles that are visible on the Nifty. Yesterday's low, which means Friday's low, has also been taken out, which was at 19,550. So these are not good signs, and a lot of weakness that is creeping in across Asia as well as from Wall Street, now impacting Nifty. Let's look at the top performers in the Nifty, given the weakness, as also the top stocks that are pulling it down. Okay, first the advanced decline ratio. Out of the 50 stocks on Nifty, 41 are in the red. So you can very well see what the trend is. As far as markets are concerned, within the Nifty, which is the top loser, it's Eicher Motors, 4.5% lower, ONGC 3.5% lower, Hindalco 2% lower, Maruti 1.6% lower. Similarly, a drop in crude oil prices has enthused bulls on Asian Paints, 1.7% higher in front of you. It's about at 32.35. Ultratech Cement, Hindustan Unilever, BPCL, and of course M&M. So it's the defensive play that is coming into the markets. So far, 19,524 on Nifty futures, down about 112 points right in front of me. We'll again take a look at what's happening as far as markets are concerned. We'll just seek Dharmesh's view. Dharmesh, a downtick of 107 points. At the moment, is there a cause for worry?
I think this trend of recent correction is likely to continue further, and for this to be a healthier correction, market should go to 19,200 or 18,500. That is where we are penciling it for this correction to get over, and that is where we would be advising for aggressive buying. So, because at 18,500, you are trading at 1-year forward PE multiple of around 18 times on the Nifty earnings. So, 17.5 to 18 is where the mean lies, and that is where the comfort zone is there. So, but this morning data, I thought that market may surprise because going by the core sectors number and the type of drop we have seen in crude oil prices and the tax correction. But screen is telling what you have been advocating this morning, and this selling to continue, and this is a healthy correction for any market. So aggressively we would start dibbling at 19,200, and 18,500 onwards we would go all out. So that is where this leg of correction should get over, according to my mind. So one should wait before pulling on the triggers for buying.
Right. Thank you, Dharmesh bhai. We'll remember RVNL from your side. It's been a fabulous outperformer in today's trade. Let me just again see what the price on RVNL is. At the moment, RVNL in front of you is trading 3% higher. Very, very strong uptick in volume. Already 1 crore shares have been traded at 174.70. Just the right moment to get Sudeep's view technically on RVNL's chart. Fire away, Sudeep.
See, if we see RVNL and all the railway stocks, last few days it has been in a tight range now, last 10-15 sessions. But today we have seen last 8-9 sessions high being taken out, and RVNL is now sustaining above 170 to 173 levels. So till the time technically it is now above 168, which is 166, 168 levels, which is the base of the last 6-7 trading sessions. I feel the stock could continue its move up to 179 and 183 on the upside. So overall 168 would act as a support, and on the upside 183, 184 levels can be revisited.
Okay, that's the view on RVNL. One very quick view on Asian Paints here, Sudeep. A very sharp correction that took the stock down from 35.57 levels to what is now 200 DMA, somewhere like 31.36 as of Friday's close. How do you see a swing trade working here?
Shailji, right now if we see Asian Paints in the month of August also, it had taken support at this 3150, 3160 kind of levels and rebounded to 3350. But given the way the crude prices have shaped up and they are sustaining above $92 a barrel, I feel that today, just because of the slight retreat in the crude prices, we are seeing a pullback in Asian Paints. But we need to see whether this momentum in crude sustains on the downside. If that is the case, then Asian Paints can see a further up move from here. If not, then once again this could be just a dead cat bounce, and we could once again see much lower levels. So for that lower levels, what are the resistances? The resistances would be 3250 on the upside, where the 20-day exponential moving average is placed. So only if we cross this level of 3250, 3260, then I feel that the stock is headed higher up to 3400. If 3260 is not crossed, this could just be a pullback, and we could see a second leg of the downside up to the 200 DMA, which you just mentioned.
Okay, that's the view on Asian Paints. The first 15-minute candle on the Nifty has been formed, ladies and gentlemen, and it is not a pretty picture. 19,532 as far as the price tick is concerned, 105. The low of the candle was 19,522. Remember, this is also below Friday's low, which was 19,553. And now we are waiting for the low of Thursday, which is 19,493. Should the Nifty fall below that low, you will see a sustained bout of selling probably coming in. Let's get Sudeep's view. What do you think, Sudeep, is the Nifty's first 15-minute red candle telling you?
If we see the Nifty's first 15-minute candle, I feel that's completely bearish. Indices are not able to cross this 19,555, 19,560 mark, and till the time this zone is not crossed 19,560, 565 on the upside, we could see the index breaking 19,521, which was 19,490, which was a couple of days back. Indices have hit that low, and I feel it could go a bit lower than that, because the candles are placed such that in the last 3 days, if we see, as of now, it is a lower top. And to create a fresher lower bottom, you need 19,490, 19,480 to be broken, and then the chart would firmly establish that lower top, lower bottom formation also. So I feel 19,490, 19,480 can get retested, but that could act as an important support zone also, because 19,500 put writers are still holding fort. So we should not be losing that angle also on the downside, that we could see some kind of a support at that 19,480, 19,490 mark, rebound once again back up to 19,560, 580 throughout in the course of the day or tomorrow, and then once again have a fresh leg on the downside once the call writers also get a bit stronger. So I feel it's going to be a seesaw kind of a move between 19,470 and 19,580, but eventually we are heading lower.
Okay, eventually we are heading lower, and that is what the first 15-minute candle of both the Nifty and the Bank Nifty are telling you. The Bank Nifty just hit a triple century, and in the wrong direction. It's down 300 points, 44,280, and across the board as far as large cap banks are concerned, I see weakness creeping in. We have a viewer who's been watching Sudeep very intently, Mr. Puneet Kumar. Sudeep, he wants a view on Uno Minda. It's one of those stocks that we've discussed fundamentally, and a lot of buy calls have come in. At the moment, the stock seems to be in a sideways consolidating trend, 599. What are the charts telling you that Puneet can act upon?
If we see this chart since April, the stock March April the stock has moved from 450 to almost it has gained 50%, and it hit a high of 660 odd levels. But right now it's trading in this range between 590 and 640, and I feel overall the stock is headed up. It is just that the stock is consolidating, and in fact, I would even go ahead and say that the stock is still in a way outperforming the markets, where we are seeing a lot of mid caps also now feeling the heat. This stock is holding out around 600, 590 kind of level. So I feel till the time the stock is holding above 580, there are chances that we see this stock rebound back up to 640, 650 levels in the next few weeks to come.
Fair point. And coming to Crompton Greaves, at the moment exactly at 200 DMA, 309 as far as prices are concerned. All-time high was of course somewhere like 510, and the stock has shown remarkable resilience over the last 5 odd months, moving from 255 to 308. What are the daily charts signifying to you, Sudeep, on Crompton Greaves?
Shailji, if we see Crompton Greaves, the stock steadily has been in a uptrending phase since last 3 months. But looking at the overall chart of the last 2 years, it is just a pullback within an overall downtrend. So I feel important levels for the stock to cross would be 325. Now this is the same zone in June 2022 when the stock after a bigger fall from 500 had taken support. So the earlier support will now act as a resistance, and 320, 325 levels could now come into play as an important resistance on the upside. So until and unless that level does not get crossed, I will not go fully bullish on this stock. It is just a pullback in an overall downtrend.
Okay, fair point as far as Crompton Greaves is concerned. The other stock that is doing fairly well at the moment is Federal Bank. Of course, we are tracking an all-time high here. Sudeep, what are the charts telling you?
Here, Shailji, here the charts are completely bullish after a fall from 150 levels to 146 in the last 2 sessions on Thursday and Friday. We have seen a gap up opening today because of the numbers which have come in good. In a way, the numbers it's a provisional numbers, but it's still much better than what the street was expecting. So I feel it's showing off in the stock prices also, and the stock has not breached its 20-day exponential moving average since August 2023. So since the first week of August. So I feel till the time this zone of 145 is held, we could see 155 and 160 on the upside in this stock.
Okay, 160 is what the charts are likely to do at the moment. A fresh record high, 150.90. Remember, it's been one of those fantastic outperformers that we've seen not only in the banking space but across the board. The 1 year performance of Federal Bank points to a 24% rise as far as prices are concerned, and Sudeep feels that there is more on the anvil. Let's take a pause here. 938. The Nifty seems to be slipping further. Let's look at the point contribution on the Nifty as far as pricing is concerned. Okay, the biggest contributor to the Nifty in terms of points is a fall of 31 points because of HDFC Bank, a fall of 20 points because of Reliance, fall of 9 points because of L&T Mindtree, and of course Infosys is contributing to a fall of 7.5 points. On the upside, Hindustan Unilever, Asian Paints, Ultratech Cement. Remember, that is how the cookie is. Defense is coming back into shape as far as circulation of money is concerned, and therefore Hindustan Unilever, Asian Paints and the cement space showing some traction on the long side. While we are discussing charts, I'd like, Sudeep, your view on Axis Bank. We've seen one of the finest charts here in the private banking space, the only stock with head above its water. What are the longer term charts telling you?
Shelby, if we see the longer term charts here, Axis Bank is completely showing a different picture than what Bank Nifty and HDFC Bank is showing us. So overall, I feel that stock is headed much higher. It can just consolidate here, move a bit slow because of the pressure that the Bank Nifty is under currently. But overall, this could outperform, and I feel it is headed up to 1100 levels. And important supports from here on could be 1010 levels where the 20-day exponential moving average is placed. So until this zone is not compromised, and until this zone of 1010 is not broken, I feel the stock is headed much higher up to 1080 and 1100 on the upside. And if we see, just to add to this point now, if you just remove HDFC Bank and Kotak Bank out of the entire Bank Nifty equation and you put an equal weight on all the banking stocks, I feel rest of the stocks are in a much better shape than what the index is displaying. So that one needs to keep in mind. One needs to separate these two names and then see Bank Nifty, because you see Federal Bank, Axis Bank, IndusInd Bank, all are doing fairly well. So if you remove these two stocks, rest Bank Nifty is doing well.
Fair point. And that's quite an explanation, Sudeep. But things are getting hot under the collar as far as Nifty is concerned. 19,500 has been taken out, at least on the futures. Cash is still down around at 19,506, 130 points down on the index, and let's see how long 19,500 stays. Let me just check the options screen in front of me, and a lot of bearish build-ups are seen in the money calls. I'll just give you an example. 19,500 call is down actually 107 rupees at about 84.60. That's how the market is at the moment. Fairly weak as far as the Nifty is concerned. But if you look at the broader markets, you will not feel the kind of pain that is there as far as the Nifty is concerned. Let's look at Vedant. Since it's a stock news as well as the one which is showing a lot of activity on the volume side as well. Your view on Vedant, Sudeep? 2.5% higher, 227.90. It's the second most active counter on the NSE 500. About 384 crores worth of transactions done, 1.72 crore shares. What are the charts telling you? Is it a dead cat bounce?
Absolutely, yes. I feel this is a dead cat bounce, because if you just see the entire month of August, the stock was not breaking 233, 235 levels. And the last 7 days saw it all. It broke down below 235 and stock retested 210. Now, again, on the way up, this zone of 235 is now acting as an important resistance. So until and unless this does not get crossed, I would not go long even from a couple of days perspective. I feel that the stock is in a downtrend. It's just surrounded by too much of news, too much of media attention. And I feel that is the reason we are seeing this volatility in this name here. The kind of restructuring that we've just seen, it's not going too well with the street. So that let's just see how the street is digesting this piece of news in the next couple of days. and 235, 240 levels for me would be a crucial resistance to cross. Till this band is not crossed, I don't feel any big bang upside, and there are a lot of better stocks than Vedanta to enter into. So I feel one should just give this stock a skip. It's in an overall downtrend when the entire metal index in the last 6 months was in an uptrend. So it's a rank underperformer, and I don't feel that we should be supporting underperforming stocks or adding them on dips just to play a dead cat bounce.
One of the most brilliant pieces of advice on Vedant, which Sudeep just elaborated, please keep that in mind as far as medium term to short term shareholders in Vedant are concerned. Thank you so much, Sudeep. What a wonderful day it has been, and what a pleasure it has been to host you on Market Today at Business Today Television. Have a nice day. Cool. So that is what was the market roundup as far as the technicals and fundamentals are concerned. It's already 9:45. Our corporate guest for the day, Mr. Atul Agarwal, whole-time director at Sterling Tools, joins us. Good morning, Mr. Agarwal. What a pleasure to host you on Market Today and on Business Today Television. Let me just give a brief profile of what Sterling Tools is doing, and then we'll shift focus to the business that you are into. The company manufactures and sells high tensile cold forge fasteners to OEMs in India. It offers special chassis and engine fasteners as well as bolts, nuts and screws. It also is in the business of providing products which are used in automotive industries and cater to passenger cars, commercial vehicles, two-wheelers and agri and construction equipment manufacturers. The long-term chart of Sterling Tools is in front of you, and with us is Mr. Atul Agarwal from the company. Mr. Agarwal, welcome to Market Today and Business Today Television. What a wonderful time to be an auto ancillary in India. How are you seeing the demand shaping up over the next 3-4 quarters, sir?
Good morning, Shailendra. Thank you for having us on the show. Yes, it's the exciting times. I think post-COVID, we had a turbulent 1 year, and I think since then, we've had an upswing in volumes across segments. I think we are in a good sweet spot. And you can see that the sweet spot is continuing the passenger vehicle segment. So, I think it's riding on the upswing of the Indian economy. So we're riding that wave, and we are a contributor to that economy as well.
Wonderful. Remember, the auto sector, along with its ancillary setup, is one of the largest creators of corporate demand and one of the largest contributors as far as the monthly GST numbers are concerned. A very, very strong festival demand that is creeping into stock prices, into auto ancillaries, is the driving tailwind behind companies such as Sterling Tools. Let's get to basics, Mr. Agarwal. Tell us the kind of demand that you are seeing from the four-wheeler side, and also elaborate on the kind of capacity expansion that will come on stream for Sterling Tools.
So, interesting. I think we have two product lines. One is called forge fasteners. Second thing we started 3 years ago was motor control units for electric vehicle supply chains. So let me just talk about fasteners for a minute. We at Sterling work across all segments, two-wheelers, to passenger vehicles, to commercial vehicles, and off-highway and farm equipment. Passenger vehicles had a bumper year last year, and I think the numbers for the first half are also looking very good. Indian economy has been talking about reaching 5 million units for the longest time, and hopefully we'll be very near that this number in this financial year 24. So we at Sterling, we work across all segments. We work with two-wheeler companies. We work with passenger vehicle companies and commercial vehicles. So we are well diversified across all segments, and we are working with market leaders in each of the segments as well. So that diversification is also helping us be counter-cyclical to industries. For example, this year passenger vehicles continues to be strong, and there have been downturn in farm equipment, which is down 10-11%, and the two-wheeler, three-wheeler space, which is pretty much flat over the last few years. Commercial vehicles had a great year last year, and we were expecting good numbers this year as well, but those numbers have not come through. There has been a lag in the growth this year in commercial vehicles. So we feel we are in a sweet spot for our fastener business. On the motor control business, we are doing these critical components for the powertrain for electric vehicles. We have acquired 15 customers across segments, and we are working with two-wheeler, three-wheeler companies. We are working with last-mile delivery vehicles, public transport companies. So we have the first mover advantage, and because of that, we believe that our MCU business is probably the largest business in India in that space. From a capex perspective, I think we have about 60 crore capex planned across our businesses this year, and that number will grow next year as well. Keeping in mind the product launches we have in mind, keeping in mind the customer acquisition we have done in both the spaces, we are very optimistic about our future as well.
Fair point. Mr. Agarwal, I'd like to repeat myself on capacity expansion. Is there any fresh capacity which is coming on stream over the next 3 to 9 months?
Yeah, I think in financial year 20, we had invested in a new facility in Bangalore, where we invested over 200 crores incrementally in the last 3 years. That capacity is still not fully booked. I think we have a lot of headroom of capacity, but having said that, we still have about 30 crore capex plan in our fastener business this year, and we probably have another 50 to 75 crore capex plan for next financial year for certain product lines where we have gaps in our capacity and gaps in our product offering vis-a-vis customers. So from a fastener capacity expansion perspective, I think we are looking at close to 100 crores capacity or capex coming through in the next 12 to 15 months on the back of the growth we have already planned.
So that would ensure that the tailwind that we are seeing in the revenue will continue. About 820 crores is what you've clocked over the last 12 months on a profit of about 52-51 crores. Mr. Agarwal, would you like to give a hint where revenue could be headed over the next 1 year, as also the profit after tax, sir?
So, Mr. Bhatnagar, we're looking at roughly doing about 1,000 crores plus this year in revenue. And I think a lot of that growth will come from our EV component business. Our fastener business will have a single-digit growth. We were expecting a high double-digit growth this year, but I think we've had some slowdown in commercial vehicles and farm equipment, which is impacting our growth numbers. But in a fastener business, single-digit growth. But in our MCU business, we are looking at a 2x growth over our revenue last year. So our EV manufacturing, our EV component business is probably going to be 33% of our revenue this financial year, up from a low 20s last year. And we believe that part of our business will grow much faster than our fastener business. From a profitability perspective basis, I think we generate about, our PAT is between 6 to 7% of our revenues. We hope to maintain that number. Yeah, our PAT is between 6 to 7% of our revenue. We hope to maintain that number this year as well. And profitability is under pressure in our fastener business because of inflationary issues. But I think the growth numbers are compensating us for the inflationary pressures as well. So guidance is between 6 to 7% PAT for this financial year.
Fair point. So a very, very sharp rise in top line, about a 20%, 25% uptick actually, from 818 to somewhere like 1,000 crores is what Mr. Agarwal is pointing at. The world sir, has moved towards the EV space, and you are no different. Tell us, what is the demand you talk about coming in from? Is it just two-wheelers, or are passenger vehicles on the EV space also demanding your attention, since you are an OEM supplier?
So, our view is that in India, the penetration for EVs will happen dramatically fast in two-wheeler, three-wheeler space, public transport space, and the last mile delivery vehicle. The passenger vehicle segment, if you look at it today, Tata leads that segment right now with a large number of 50,000 units a year, but it's a fraction of the volume there in that business. The infrastructure, the ecosystem for EV component supply chains for passenger vehicles is not very strong right now. We need to build a lot more competencies in our battery making facilities, because that's the largest chunk of an EV vehicle. So I think the penetration, our view is, will be very strong, like I said, in two-wheeler, three-wheeler, public transport, and last mile delivery. And that's where we have gotten bulk of our success. Now, having said that, we have a product ready. We are in fact we are working on some RFQs with our passenger vehicle customers as well. The volumes are very small right now, and we feel this will take 3 to 5 years before the revenue really, or the volume really starts kicking in for e-vehicles in the passenger vehicle segment.
So that's the way forward for EVs. Mr. Agarwal, are you looking to raise any funds beyond what you've already invested, given the sharp uptick that we see in auto demand coming in from the consumer side? Would you be investing in any fresh capacity, or at the moment what's come up in Bangalore is good enough for you?
No, so for our fastener business, like I said, we'll have in the next year or so about 100 crores of capex coming through in pure cash terms. But our motor control unit business, we have a capex of 30 crores planned this year, and we have a substantial roadmap ahead for that business. We're going to build more capacities, and as and when we have visibility of capacity requirements beyond this, we will be adding a lot more capacity and new product lines, which will also mean that we'll have to do a large amount of capex in our EV component business as well. So we see a lot of upside or tailwinds on both our component businesses.
Mr. Agarwal, could you please explain what the motor control unit does in an EV, whether it's a two-wheeler or a passenger vehicle? Are both different from each other?
So, if you look at the EV powertrain, unlike fossil fuel powertrain, EV powertrain, you got a battery unit, which runs the motor. And besides the motor, there's what we make motor control units. So motor control unit is an interface between the user of that vehicle, which is telling the motor what to do in terms of what torque, what speed it should run at, which also manages the battery as well, as to what kind of power should be drawn down from the battery to run that motor. So it's a very critical piece of engineering. It has a huge hardware and a software layer on top. There's a lot of customization done for the consumer depending on their needs. So it's a very critical component and part of the powertrain. So there's a lot of engineering, both hardware and software, which goes into it. So I would say there are three critical components in a powertrain, e-powertrain: battery, motor, and a motor control unit. And I think we are sitting on a good wicket. We have invested a lot into technology, people engineering. We have a big tech center out of Bangalore to support our motor control unit business, both from a hardware design perspective and a software design perspective as well. So there's a large amount of firmware sitting on top of the hardware below that.
Fair point. Mr. Agarwal, I've been watching your financials across the peer level, and I don't see a problem anywhere when you look at how your peers are doing, like Lakshmi Precision Screws, and of course the top dog in the sector, which is Sundaram Fasteners. What really is inexplicable is how come the stock has been an underperformer. It's trailed not only its peers but also the BSC sectoral index. what is holding you back, and what should shareholders look forward to, say, in the next 12 to 18 months?
So, firstly, let me just one a correction. Lakshmi Precision Screws shut down under bankruptcy laws in NCLT about 5-6 years ago. And yes, you're right about Sundaram Fasteners. Um, um, they're a very respected company. They've done very well. They're 60 years old in the business, so we always appreciate what they've achieved. Coming back to Sterling Tools, I think what I can do, what we are doing now from our perspective is we are increasing our investor communication. We were normally a very shy company till about a year ago. We did not, our communication levels were not as good, which is what we are trying to improve, our investor communication. But from a numbers perspective, we believe we do very well. We just need to grow our revenue faster. We need to add more product lines as we go forward, which is what we are working on. But what we can assure our investors, the markets is our numbers continue to do very well. All our parameters are very good from a return on capital perspective. Our customer profile, our governance, our transparency is very good. We just need to work on our revenue growth and adding more product lines as we go forward.
Wonderful. Mr. Agarwal, all the good luck to you. The reason why I mentioned that, everything is ticking very well for the sector. The tailwind is fairly strong. The kind of capacity expansion that we are seeing in OEMs is perhaps one of the best things that happening to corporate India. And if OMCs do well, it's only a matter of time when auto ancillaries such as you do fantastically well. All the good luck to you, and let's hope 2 or 3 quarters later, when you come to us, the smile that is there on your face would be wider and better still. Have a nice day, and it's wonderful chatting with you, Mr. Agarwal.
Thank you. Thank you very much.
Okay. Ladies and gentlemen, we'll come back to the markets. This is the time when Market Today takes your leave. But for the moment, the 19,500 level on the Nifty has been broken at about 19,491. The Nifty is now down 150 points. Remember, it's the first 45 minutes of trade that has happened, and we've seen large amounts of weakness crawling into the Lal Street from Asia as well as overnight from Wall Street. The Nifty Bank is in a slightly better shape, although still down 250 points, 44,321. Across the board, there's a tick of red as far as main indices are concerned. But we have some good news as far as the cash markets are concerned. We see a very strong traction coming in terms of all-time highs. You've seen it happening on Aster DM. This is, of course, a hospital chain, 345, up 5% higher. Thermax, 3% higher, 3,200. Federal Bank, 151.05, up 262. Blue Sky Territory record high. And of course, RECL, 291.10, 1.29% higher. These are the counters that are at record highs. I'll add a few which have been at 52-week highs. Very strong traction coming in on Union Bank, 108, 52% higher. Suven Pharma, 569, 1.3% higher. And of course, Coromandel International, 1.1% higher, 1158. So while the indices might have been pointing to weakness that has creeped in from overseas, but the broader sentiment and the broader, how should I say, fail in the stock markets on a wider sense remain fairly strong. With that, we'll call it a day, but remain glued into BTTV for your financial needs as well as the best coverage on stock markets. Have a nice day.
The Silicon Valley of India is facing a shutdown. As many as 44 flights to and from Bengaluru have been cancelled. Section 144 has been imposed in the city until Saturday 12 a.m. Schools and colleges have been forced to shut too. Bengaluru, remember, is the IT hub, and most of these IT companies have now asked their employees to work from home. But why? All of this is in the wake of statewide Karnataka Bandh called by the umbrella organization of Kannada and farmers' outfits called Kannada Okuta, which is protesting against the release of Kaveri water, the river water, to neighboring Tamil Nadu. Remember, this is the second Bandh being held this week. The first one was in Bengaluru on 26th of September, followed by a statewide Bandh now, which is being held today, that's 29th of September. More than 1,900 associations are supporting the Bandh. Protesters want to shut down highways, toll gates, rail services and airports. As the situation gets even grave, authorities are doing their bit to help ensure normal life returns back. But the question is, how soon or how much longer will the issues continue to haunt the Bengaluru citizens?
If you like the video, do like, comment, share and subscribe.
Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra. Well, India's residential market is buzzing. Housing sales in India are at an all-time high, as residential sales between July and September are now up 36% from last year, and this is as per real estate consultant Anurag. To discuss the demand outlook going forward from here, joining us on this special edition is Mr. Anuj Puri, the chairman and founder of Anurag. Welcome, Mr. Puri, and thank you so much for taking the time out for discussion.